Hello.
Hello. How are you
Hi.
doing, Saleh?
I'm doing good. Yourself? Do you hear me?
Yes, very loud
Good.
and clear.
Good. Perfect. Perfect. Hopefully this will stay.
Hello and welcome everyone to the Future of Fintech Post-COVID-19 webinar. It's my pleasure to introduce our honorable speakers for today.
Can you hear me?
Yes, very well.
Hello, can you hear me?
Yes, very good. Everyone can hear me?
Yes.
Very good. It's my pleasure to introduce our honorable speakers for today's session, Mr. Sleem Hasan, CEO and founder of Privity, Mr. Saleh Alhammad, advisor to the board at Elite Crowdfunding Limited, and Mr. Namir Khan, Middle East Top 50 Fintech Influencers and Chairman, founding board member at MENA Fintech Association. Gentlemen, welcome and thank you for joining us today. Without further ado, let's start off with our first speaker, Mr. Namir. Mr. Namir, can you hear me?
He's muted.
Mr. Namir. Can you hear us, Mr. Namir?
Maybe he lost the connection.
Yeah, maybe something going on with the microphone. No problem. Should we start off with Sleem then?
Yes, sure. Well, thank you very much for the kind introduction, Imad. And pleasure and honor to be here on your panel at Investera. I'd like to perhaps start by, first of all, wishing all the attendees, I hope and trust that they and their families are safe and well at these very, very challenging times. And today's content and data that I've compiled and collected for today's discussion, I've got from different sources. And for those who are interested in learning more about it, I'll be happy to share the links with Mr. Imad at Investera to forward on to anybody who has interest later. So by all means, feel free to revert to Mr. Imad down the road. So I'll start by making a few observations based upon what I have gleaned from my findings. And I summarize it by saying every cloud has a silver lining. It's an expression in English which means through different challenges that you face out, sometimes you get favorable responses and outcomes that can arise. So what is the cloud and what are the silver linings that I'm referring to? Can somebody just mute? There's some noise in the background. Thank you. Yeah, so the cloud that we're referring to, that we all know has been brought upon by this invisible enemy, COVID-19, which has really brought the global economy to a standstill. And with limited capital, a lot of SMEs across the globe are particularly vulnerable, and fintech startups are no exception. That said, a lot of the venture capital funds and investors have been liquidating assets, and the fintechs will need to tighten their finances and cut costs to survive this particular drop. So what does the future have in store for this industry? Let's just deep dive a little bit into that. So what I find is this whole ecosystem is going to become very Darwinian. And by that, I mean survival of the fittest. So profitable enterprises on the one hand, and those backed by funding or those that were already fortunate to have funding will have the upper hand, no doubt. And those early stage startups, perhaps that were looking for capital and stuff, may suffer because competition for the cash obviously intensifies. Before the crisis hit, there were only a limited number of fintechs that were breaking even or profitable. And that goes across the tech board, not just fintechs in particular, but generally speaking. And this could pose a potential problem for the sector. We also saw the volume of global fintech deals that were already on the decline. And that came off down quite sharply in the first quarter of 2020. In February, for example, transactions were down 22% year on year. And we believe this drop, I'm talking in general now, because there are obviously exceptions to what I'm saying, but the drop in general will likely deepen in coming months. So this fintech ecosystem that I'm talking about has proven to be very transformative for finance on the one hand. And in different geographies, whether it's you're looking at the developed countries or the developing countries, each one has a different story to tell. While there are commonalities across the different geographies, each one has its own idiosyncrasies. And I'd like to just highlight some of those things to the audience. So payment revenues worldwide are forecast to drop by as much as 8 to 10% as spending decreases, which is the equivalent to a reduction of $165 billion to $21 billion. And this is according to McKinsey's Global Payments Map. A lot of business models of many fintechs, which have relied on scaling up their customer base and making small profit margins from the money transfer and payment systems, those will have to be looked into as well. So fintechs that also rely on cross-border transactions, such as travel spending or international payments, for example, they will perhaps be more affected by the restrictions on travel and international trade, as we know. Depending on when the lockdowns finish, when airports open up, when flights resume, that cross-border activity will obviously, those fintechs that are dependent on that will obviously witness a different type of response. So combined with this lack of funding, there may be that several businesses will fail or see their valuations decline. In fact, a lot of VCs now, are revising term sheets and valuations as a result. And there was some data recently that came out in a webinar that was put together with Magnate, which is, as you know, one of the big data providers on VC and PE within the region, in line with INSEAD, which I'll share with you in a while. Going forward, I think fintech, the crucial question is whether digital financial services will thrive in an environment that forces consumers to switch to online channels. And I think the fintech revolution that emerged in part from the ashes of the previous global financial crisis and its startups have a track record of being agile. So it's likely they'll be quick to respond to uncertainty. So there are numerous ways of looking at this innovative approach that they have, and this could provide a fillip to the economy's recovery. I'll give you some examples. For example, in order to avoid companies defaulting, say in the UK, the government is rushing in to inject cash into the economy to capitalize businesses and the self-employed through financial aids. The circulation of large amounts of money, of cash, through something called CBILS, which is the Coronavirus Business Interruption Loan Scheme, in such a short amount of time is a difficult exercise that requires a solid financial infrastructure and supply chain to execute this. So if there are fintechs out there that are uniquely positioned to step in and facilitate credit requests from businesses and funding to individuals, they could benefit. So this is one of the silver linings I'm talking about. Previously, perhaps governments were a little bit too distant from the startup world, but because of this upheaval that we've all experienced, suddenly, everybody's coming together, which is, a benefit and one of the silver linings that I was referring to earlier. Machine learning algorithms can also put fintechs like Funding Circle or Oak North at an advantage, as they are called in to assess the credit worthiness of businesses that distribute loans by automating the due diligence process. I'll now talk about fintech as a force for good. It's important to acknowledge the ways that the fintech community has been a force for good during this time. And I'm going to give you one specific example from the UK fintech community. It was led by Credit Kudos, Fronted and 11FS. They came together to create a digital solution for the self-employed to prove a loss of income via open banking and be eligible to apply for government and for fiscal support. So this initiative came out and was given birth through this response to COVID and how it impacted the ecosystem. And this was so incredible that this was developed over the space of a weekend. And Greensill Capital, meanwhile, has provided its salary finance platform at no cost to allow the NHS workers to be paid sooner. So this I'm giving you is an example of, how people can join forces in such challenging times to overcome, hurdles and obstacles that are caused by, a pandemic of this nature and this magnitude. I'd also like to point out that as recently as June 24th, Previce, a fintech was also approved to use CBILS loans for late payments. It's an invoice financing platform. That said, there've also been ups and downs and upheavals in this industry. You've had large giants, which have been impacted, not necessarily because of COVID, but because of fraudulent activities, as we saw in Wirecard. And then on the other hand, we saw a very large fintech recently in the US called Scale Factor. They raised $100 million from investors, including Bessemer and Co2. And they, as recently as the 23rd of June, were abruptly shutting down. So I'm showing you basically pluses and minuses in this region, in this ecosystem that's happening in the fintech space. There was also a very good news coming out of Africa today, which I just like to quickly share with the audience here. MFS Africa, they acquired a digital payments provider called Bionic, and the announcement came today. So MFS, for those who don't know, is a Johannesburg-based fintech, and they acquired Bionic, which is a digital payments management provider of business services for SMEs, fintechs, and social impact entities across Africa. MFS Africa claims to be Africa's largest digital payments hub, which connects more than 200 million mobile wallets on the continent through one API. So I think that should start painting the scene as the kind of observations I've been able to glean from the different, but I'd like to now just touch upon a couple of other things that perhaps one should go, for what should fintechs do and how should they meet this challenge, and maybe address those points as well. So some of the ways that I think the most immediate concerns that a lot of fintechs, they should go into what I call the survive, revive, and thrive mode. First of all, survival instincts. You've got to survive in this environment. And then you've got to revive yourself, and then hopefully thrive if all the plans work. So how do you go about it? What are the things that a lot of companies have been doing, in particular some insurtech and proptech companies? They've been shoring up their capital and funding from investors and lenders. So I think that is something, regardless of who you are, access to funding is key and very important. It should be top of your list. Of course, whilst you might not be able to control the revenues or guarantee the funding coming in, what you can control and what is in your hand is your cost. So cost saving measures, whether it's salaries, workforce reduction, this is very, very important. And why so for fintechs more than others? Because a lot of their revenues are transaction and volume based. So the priority strategy right now is in making some of these expenses, which are variable and fixed expenses, you try to minimize them. And then we move into operational resilience. That should be on top of the mind of fintech companies as well. There are a lot of lending fintech companies that are being inundated right now with customer requests for forbearance and relief, especially when it comes to securing the small business loans. There have been programs that have been established, for example, like the PPP, the Payroll Protection Program, which is part of the CARES Act in the US. And then, of course, when it comes to insurtechs, there are a lot of them in the market today. There are so many insurtech companies. And this is also creating a lot of challenges because to win the investor attention, there's a lot of struggle going on. And that goes back to my comment earlier about the Darwinian nature of this space, survival of the fittest. Fintechs, on the other hand, they're also uniquely positioned to step in and facilitate credit requests for businesses and funding to individuals. And this is where, using automation, machine learning and all can put them at an advantage. Last but not the least, I will just touch upon some of the comments that came out of another report that I was reading, which was quite interesting. The speed at which paperless solutions in trade finance is being adapted now is going to accelerate under the current circumstances. And I found this quite interesting. So fintechs in this space who are actually addressing this particular problem, they're benefiting. So when it comes to online banking portals, treasurers with real-time access to their cash positions are increasingly important because liquidity becomes critical. Also, e-signing documents with physical movement is being restricted because of working from home and stuff. That is taking off as well. And some banks have even introduced virtual due diligence inspections in lieu of physical visits to factories for companies that are repurposing supply chains to help them with their relief efforts. And a lot of them, where they have long-standing customer relations and clients who need new working capital support, what some banks are doing right now, they're issuing multi-million-dollar financing packages in less than a day because they all have the data that they need about the client. So it's easily accessible online. Needless to say, artificial intelligence, APIs, and faster payments all help ease the pain around the transactions that bankers need to help their corporate clients face within this crisis. Banks without digital ability, the large, big incumbent players, they're going to be challenged. So either they have to adopt and take on the new transformation to this digital world, or they get left behind. Another area where we see a lot of rapid acceleration is in also blockchain adoption in trade and trade finance. And then also digitizing or tokenizing payments through blockchain also allows working capital to flow from one end of the supply chain to the other end in a very safe and efficient manner. So I'll take a pause there if there are any questions, or we want to pass on to one of my fellow speakers. And maybe I can come back in and chime in later if need be, but I don't want to take up all the time.
We have a Q&A session will be at the end of this.
That's fine. I'm just mindful of the time. So because when we discussed, you said 15 minutes. So I think I'm coming up to that mark now. So I thought I'll take a little pause there.
Thank you very much, Mr. Salim. We definitely appreciate your input. Mr. Namir, can you hear us now?
Oh, I can hear you. Can you hear me?
Very well, very well. Yes.
Fantastic.
Well, thank you. So, Mr. Namir, we wanted to see your input on the future of fintech post-COVID-19.
So, number one, thank you so much for having me, and apologies for the previous disconnect.
No.
For the first time it happened with me, but there's always a first time. So, yes. So a few things. Salim had already mentioned many of those things, but I would just like to highlight the short-term and the long-term things that are coming ahead of us. Now, let's just also understand one quick thing in terms of when we're talking about COVID in specific and what has happened. So we were having a similar conversation with some schemes earlier on. See, the thing is that the digital adoption, I mean, we've always been talking about it for the numerous years, but it has really picked up in the past 4 months versus what has happened probably in the past couple of years, right? So what we were expecting to happen in the next 2 years, as they say, has happened in the past 4 months as well. Now, the other important thing is that we have also broken down that limitation, that barrier that we had, that digital adoption is only for the young ones. Right now, at this present point of time, you have generations above 50, generations above 60, generations above even, I must say, 70 in some exceptional cases, who have started using digital platforms for day-to-day engagement and day-to-day activities, right? So that's another plus point. Now, once that's basically happening, that means financial services, which is a core requirement, always and certainly comes into play. No matter what you do, financial services is not going to go out of play. Therefore, the need for digital adoption when it comes to financial services increases significantly, right? At the same time, we also need to understand that at this point of time, when it comes to financial services, the consumer is broad, right? And the thing that we need to also look into is that there is this core requirement of ethical consumption that the consumer is going to go towards, and at the same time, conscious consumption, which means that the user is going to become really conscious in terms of their spending, how they're spending, why they're spending, which means we need relevant platforms that are going to address that need and the change in behavior that we have seen in the user, right? So now another thing that I would like to highlight in terms of what's basically happening in the fintech space is the non-fintech players entering into the fintech space. We were just having another session right now, and that's the same discussion that non-financial players are entering into the financial services landscape. Now, the reason why that is happening, it's more towards lifestyle integration that these platforms are talking about. You have Kareem that just announced recently the partnership with Visa. That's just one step forward. Now you would see more partnerships like that coming in. So in terms of the low-hanging fruits that I would see in terms of what's happening in the fintech space and specific to MENA, that has changed dramatically, I must say, in the versus the previous years to what it is now. And what we have seen in the past 3-4 months in terms of the number of partnerships that you will see being announced in the coming months as well is going to be significant. You would see a rise of BNPL as many platforms will start integrating BNPL into their as one of the core offerings. A lot of BNPL companies are already partnering with retail players and already partnering with a few banks as well. Now, at the same time, like I said, non-banking players are going to be entering into banking, and those who have already entered into banking will be also and started focusing on the payments landscape will now be focusing later on into the lending landscape as well, because that's going to be another thing. Now, so UAE is a fantastic market in terms of, let's say, we have a very structured market, and the regulators are opening up more and more. We have you know friendlier regulations coming in too. But when we are going to be looking into the larger MENA market, where 86% of the population is still unbanked, right? You see more opportunities in terms of you know uh, platforms coming in, like the Kareems or maybe other wallet platforms that are basically focusing to penetrate into the unbanked market. I think that you would see a significant rise in that. Now, the other key thing that we've also seen that is also happening is, to support the rise of this, is the eKYC guidelines and the digital guidelines that are coming in by the central banks. Now, the reason that they're coming into play is to basically ensure that, number one, we are able to rely on the infrastructure that some of the countries have basically placed, such as the digital identities that you have. Some countries have, some countries do not have that. But wherever you have these digital identities, they will be utilized, and the infrastructure will be further utilized as well, and the digital guidelines will certainly pick up when it comes to KYC. The other thing that we're also looking into right now in the region, which is very promising, which I can share with you, is passporting, which is going to happen soon, right? Which is going to be a very key thing for the fintech players itself, because that has always been a major barrier, that what is going to be the future. Because if you have fintech in one country and you need to expand that fintech into the next country, that becomes a major difficulty, right? So that is also being addressed by the regulators jointly, which is a very promising thing that's going to be happening as well. In terms of the investment, I mean, Sleem had already mentioned that as well, in terms of what startups need to be doing at this point of time, and I wouldn't agree more than that. That when we're talking about startups in specific, you have to be very cash. In terms of your cash, your liquidity is your king, right? So I mean, if as always, the cash is king. So you need to be able to master the game of liquidity in the next 12 months. If you're able to master the game of liquidity, then you are in it for good. But that is something really critical, and that is very key, which means at this point of time, the focus should be on growth, scale, and sustainability, which is easier said than done. And in terms of the VCs that we've been speaking to, in specific to the MENA fintech region, yes, there has been skepticism that has been given birth to, but at the same time, we also see significant positivity from certain VCs who have been having a vision with them. That's just a bit about what I had to say.
Thank you very much, Namir. Definitely appreciate it. I just want to say, transforming all these potentials into reality in these challenging times will require resilience and partnership from all the stakeholders indeed. With that, I would want to move forward to Mr. Saleh on the impacts of COVID-19 in different fintech sectors. Mr. Saleh.
Yes. Hi, do you hear me?
Yes, loud and clear.
Good. Thank you, Ahmad, and thank you for great to be here. Yes, actually, my colleagues cover most of the topic, but let me highlight in some of the issues. Basically, the fintech sector has been hit hardly like other sectors, but the impact is various from one sigma to another. So if we take a very quick look to those sigma and see how it's affected currently in short term and in the long term. So let's say if we started number one with payment, we see anything related to travel, tourism, entertainment, or cross-border transactions, we see a significant drop in that. However, on the other hand, we see significant increase in contactless payment as well as e-commerce payment. So I think there is a lot of innovative in payment, and that will continue to grow. Number two, when it's come to wealth tech and capital market, frankly, this sigma has been doing great during the pandemic. We have seen globally couple of acquisition. Also, we have seen a couple of startups that successfully raised fund. Regionally, we have seen Wahed investor have successfully raised capital with Aramco during this crisis. They have raised capital through Aramco Venture and others. What we have seen in this, I mean, the client or the investor behavior, they are moving into robo-advisory, but they want to interact with the human. So we see it more into hyper robo-advisory. Number three, the insurtech. Frankly, the current crisis showing how static and outdated the traditional insurance products. A client, a consumer, they want more flexible and transparent products. I think in the future, we will see more into on-demand insurance, as well as we will see a lot of digitalization in the value chain operation of the underwriting and claim management. Number four, when it's come to banking and lending. For challenger banks, I think they are struggling, except with some flexibility for those who has a lot of cash, so those will be easy for them. For digital lending, I think we will see increase of default, as well as not too many given loan out there. However, some of them have been benefit from the government stimulation package program. So in this sigma, I think it depends on the economy, how long it takes, depends on the stability. Are we going to U-shape or V-shape, L-shape, when the economy is recovering, so their client will come back. For the prop tech and / real estate, we see drop in the volume on the platforms because, during this COVID-19, people staying home, they don't move. But in the future, we will see more into the digital, more into technology and digital processing. Also, we will see more technology integrated. So client will expect to see more virtual home tour, virtual neighborhood tour. So those companies need to do some sort of technology integration with virtual reality. Finally, when it's come to technology, fintech technology providers / enabler, for instance, like banking as a services, payment as a services, those company has a huge potential for their services because fintechs, banks, and others, they need their solutions. For instance, in the bank, digital transformation has been accelerated. So banks, they don't have the tools to do it. So they need to partner with fintechs. They have to partner with those companies. They have offer product and services with less price and more efficient. And they can be good collaboration with the banks to do it. Also, we have seen, in general, we've seen a lot of easiness and cooperation with the central banks and with the regulators to help the fintech, to help the transformation of digitalization of the banks, in addition to general general trend that we see it's moving fast. For instance, artificial intelligence, automation, ABs, also some of regulator around the globe will move forward for open banking. In addition, we have seen also a couple of, in terms of security, in terms of blockchain. In Saudi Arabia, SAMA, Central Bank, last month, they have done wrist transaction as a pilot from the Central Bank to transfer money to banks using blockchain. So we seeing banks are, regulator moving toward that.
Definitely. I want to add on to what Mr. Ahmad was saying. It's sometimes with startups, after it feels like it's a marriage of necessity between startups and major financial institutions for the pursuit of faster and simpler to change the way we manage money. It feels we are on the brink of major technological changes that will happen within the period of post-COVID-19. Moving forward, gentlemen, we do have a few questions from the audience. If you want, we can open up a Q&A session. There's a question from Meghna Yagi. It's how can fintech startups win the attention of investors? It's open question, Mr. Khalil. Yeah.
You mean, is it for the, if I understand the question right, is it for raising the capital for?
Raising the capital.
Yeah, I think, in the past, if you have a good idea, it's okay, you can raise capital. Nowadays, I think you have to have a great idea. You have to have a great story to help to raise the capital. So I think that's the challenge, and it's anything related to, the crisis in the beginning, it was a health crisis. So anything related to touchless or contactless, definitely it will increase that.
If I can just chime in there. Capital raising amongst the startup community is always been a very, very challenging process. However bright the idea is, even Google in its early days when it was called Backrub, it went to over 58 to 80 VCs before it got its first funding. Today it's a giant. And then also, it's also a question of, is your idea coming at the right place at the right time? Because capital is sitting there, and as you can imagine, today there's abundance of capital because interest rates are so low. So banks are just sitting on capital, they're not moving or giving it out. And those people who are looking for the capital or those people who have raised the capital are sitting on dry powder looking for great ideas. So it's a question of coming up with something to, echo Mr. Saleh's comments of coming up with a great idea. I think that is absolutely correct. You need to differentiate yourself from others. You need to be unique with your idea. And at the same time, have a team around you. If you come as a one-man founder and you have a great idea and you want to raise capital, the chances are, so there are many different touch points around capital raising. What ticks the box for different VCs or investors? Each one has their own set of yardsticks, but I just share a couple of points because this is what I do for a living here at Privity. I meet entrepreneurs, early stage startups who are looking. So some of them might be great in technology, but have no understanding about finance or operations. Or they might be great on the, leading the company, but have absolutely zero clue. So it's important to bring blended skills together under one roof and form that core team. Having a good founder, so somebody you can talk to, otherwise it's very solitary being on your own. When you have no one to talk to and you're building a business, it can be very challenging, very lonely. And it's a struggle. Let's be very clear about it. It's not for the faint-hearted, this business. And I'm not trying to say that to put anybody off, but you have to be, there's a lot of grit, a lot of determination, a lot of resilience, a lot of hard work, the old-fashioned way. But if you have a good idea and you believe in it and you believe in yourself, follow it. And I think with determination, you will get there, because then you will get noticed, because people see that you're onto something. Now, if your idea doesn't stack up, or the business logic underlying that idea falls down for whatever reasons, if you tell an investor 1 + 1 = 3, he'll scratch his head. He says, no, 1 + 1 = 2. Why are you saying 3? So the business logic must make sense. And then identifying a problem that you're solving. What is it, the problem that you're solving? And most important of all, everything aside, is being able to articulate your idea to the investor in a way that he or she understands it. A lot of the times you have brilliant founders who come, everything is sitting up there, but trying to take it from their brain, through their mouth, across to the investor, therein lies the challenge. So communication and articulating the idea is very, very important. I always tell people, however smart you are, or however great your idea is, if you cannot explain it to me so that, and imagine I'm a 4-year-old and I don't understand it, well then, you've lost, not me, you've lost. So I think that is also quite key when it goes to raising capital. Be short, to the point, and make somebody go, wow, that is something I've never thought about. And then you've got my attention, you've got me engaged, and then hopefully you can advance to the next set of questions that the investor. But the idea is to capture my attention at hello. This is the most important thing. Capture my attention at hello. So I hope that helps in answering that question from the audience.
Thank you very much, Salim. We have a couple more questions. One from Abraham. The question is how blockchain tokenization will benefit. An open question for all panelists. I'll repeat the question: how blockchain tokenization will benefit from the current crisis?
Well, look, I mean, blockchain is the world's first immutable decentralized ledger. Tokenization is basically creating fractional ownership. Today, think real estate. Think of real estate. Now, today, Mr. Saleh wants to buy a tower. He can go and buy it because he's got very deep pockets. But I, on the other hand, I don't have deep pockets, but I also want to buy a tower. That's not possible. Well, maybe you can say I can buy one apartment, but that's not available. You either buy the whole building or nothing. But what if you were to digitize the tower and then create fractional ownerships that are represented by the tokens, which sit on the blockchain and allow access to somebody who wants to buy it? Now suddenly a small guy can actually participate in that same opportunity that the big guys can do. So that in a nutshell is how the tokenization works. I hope I've explained it in a simple way that answers the question.
Thank you very much, Mr. Salim. There's also another question: is there any symmetry between current challenges and 2008 financial meltdown? In terms damage, can we apply the hard-learned lessons of 2008 crisis to the current ones? A question from Abhishek to all panelists.
Well, you want to go ahead, Mr. Saleh?
You go ahead. You go ahead, please.
All right. Well, look, I lived the crisis in 2008, and obviously I'm here talking to you now. So we've all been here during the recent crisis. My answer is yes and no. Yes, there are a lot of similarities and parallels I can draw. The no side is what caused the crisis back then were systemic risks that existed within the financial system. A lot of those problems that existed were addressed due to different laws and acts that came into being in the US, for example. That said, what has caused this problem today is the whole global economy was already on a downtrend, slowing down. GDPs were being revised lower. What exacerbated and accelerated that decline was this wild card that came out of nowhere and hit all of us in the face like a hot towel in a sushi bar. And boom, here we are. That is one of the biggest difference. And what makes it even more different is the fact that as of today, there's no potential cure, i.e. a vaccine for it. So if somebody says, the future of fintech in a post-COVID world, the word post would suggest after the COVID has happened. Well, we're still in that COVID. Let's be clear. While things have eased and relaxed in certain geographies, and while things have opened up, slow but surely, I mean, only yesterday or day before, the Director General of the World Health Organization said, it's far from over. You know, the worst is yet to come. So now if this is what the officials are saying about this particular problem that's affected all of us badly, then we should still remain on our guard. So that's one of the biggest differences that I would state in answering your question compared to the crisis back then. Then there was a problem, it was addressed, there was a solution, and then of course the recovery began. Can any analyst worth his salt, from the biggest brands, blue chip names, to the small, stand up and put his hand up and say, I have a roadmap of how exactly this recovery is going to unfold? I don't think anybody can. It would be an exercise in futility, in my opinion, because the answer is this is one case study that nobody has witnessed nor experienced in our lifetimes. And we can't even draw parallels in history. Even if you go back to, you know, at the turn of the century when you had the different plagues and stuff and the different problems, it was far too long ago, and the world has changed because today with the advent of technology, many things are very, very different today than they were 100 years ago, whenever the, you know, last type of, you know, Spanish, there was a Spanish fever, and, you know, all the different things that happened over time. Today, the dynamics behind this particular challenge that we are facing today is very, very different. Now, I wish I had all the answers, and I'm, you know, the first to put my hands up and say I don't, but I'll leave it to my colleague. Maybe he can shed some light in a different angle, but those are my comments on that particular question.
Absolutely. I mean, I couldn't agree with you more. Yes, it started, I mean, 2008, 2007, 2008, it started as a financial crisis and it hit the economy. However, back then, there is a couple of sectors that not been affected. I mean, if comparing today, it's health crisis that affected all the economy. So if we compare back then today, for instance, the healthcare doesn't have a pressure like today we have in the healthcare. So back then, the healthcare, they are doing well. People are traveling. All the businesses working. Yes, they've been affected in terms of some of them in the financial. Right now, it's too many questions. How is, I mean, consumer people behavior after the COVID? How long COVID-19 will stay for? Is there hopefully not another wave of COVID-19? All these questions, it need to be answered. And as Mr. Salim say, no one has the answer. So I think the short answer for all that, we don't know. We don't know, I mean, future, what will happen.
Absolutely. Thank you, Mr. Saleh. Now, this is a question that's been coming to my mind as well from Mr. Rahman. In an event that's with such magnitude, how soon do we expect it to be over? And what are the expectations in terms of an estimation point for this to be over?
Well, how soon can you get a vaccine out there is my answer to your very simple answer. If he can answer that question, I'll tell him when it's going to be over.
Thank you. Absolutely. Now, there's a following question from Mr. Abraham to Mr. Salim. Will artificial intelligence and data science products will get prominence in fintech?
Absolutely. Look, I mean, one of the things that a lot of these fintechs are doing, and this is, I think, is very, very important, is because as you generate more and more data, right? I mean, this is, you know, one of the things that is a byproduct of software today. And it's also one of the reasons why, in my opinion, technology companies will, I think, steal a march over a lot of their competitors. And that is because a lot of their products and services use software. And that's one of the reasons why maybe they can remain slightly more insulated than other bricks and mortar types of businesses. But as you generate data, the ability to collect the data, make sure the integrity of the data is intact, and then try to create actionable insights. So obviously using, deep machine learning and, using neural networks to analyze that data, especially when you have, petabytes and petabytes of data. This cannot be done by a human being. This is where artificial intelligence comes in, to analyze that data. And of course, fintechs that are focusing on this, yes, will get prominence, absolutely. There's no doubt in my mind. And today the whole world is moving towards more a data-driven type of economy. Everybody is relying on data to create better, when you get, as long as the integrity of the data is impacted, this is the first thing I say. If the integrity is not sound, then it doesn't matter what comes out on the other end. It's based on, a bad input. As long as the input is sacrosanct, then what comes out on the other end, thanks to AI, will be actionable. Absolutely.
If you allow me to add just one thing for my colleague Salim. Yes, I agree with you. I mean, definitely AI will be there and it will accelerate the way we do business. Frankly, in the very new, we started to see it. We start to see live stream data. So the decision will be immediately making. So once we have those open banking APIs integrated with each other, with the help of machine learning, we will see live stream data.
Thank you, Mr. Saleh. There's one final question from Ms. Taiga. How can fintechs leverage their unique assets and skills to seize new opportunities in the future? An open question to all panelists.
Well, I mean, like the example I cited earlier, let me get my notes here. I think I talked about how those three companies in the UK got together and over a weekend generated a solution to provide payroll to the NHS, right? This was a real example. It happened in the UK just now because of the whole problem, with the NHS and the hospital and nurses and workers working overtime round the clock. And then of course, there was everything came to a halt. So they wanted to make sure at least this sector of the community that were giving the most sacrifice towards this challenge, at least they didn't have to suffer or get penalized on their salaries and stuff. But then the government that was creating all, injecting all this capital in, it's a huge amount to go through a financial infrastructure and get to that right person at the right time. But thanks to the solutions that these fintechs came up with, they were able to achieve that. And this is, remarkable. It's incredible that they were able to do that. And this is a real case study that happened just now in the UK. So that's why I gave that example, because this is exactly addressing the question how they can leverage their skills and stuff to get nimble. And of course, what a better client to have than a government-owned entity like the NHS, or in any country having the equivalent. It's not easy to get a client, let alone a government as your client, But because of this, the circumstances that everybody found themselves in, they were desperate for solutions. And that's why the agility and nimbleness and smarts of a fintech could capitalize on this and generate those solutions that helped the NHS workers.
Thank you, Mr. Salim. Mr. Saleh, any input on the question?
Yes, actually, I think we will, as we move on, we will start to see a lot of evolvement between the fintechs with the blockchain. So right now we see instant payment, we see borderless payment. I mean, think about it. A while ago, to make a money transfer, it takes you a couple of days. Right now, with one click, you get it, the transfer of the money. Also, we see things, for instance, I mean, it will continue on evolvement with the help of regulators and other big guys. For instance, the blockchain and token, I mean, see a couple of companies when they want to go IPO, they have to hire a couple of consultancy, a couple of underwriters on light of those. And that is costly. With the blockchain and token, that will make, I mean, reduce the fraction of it to a very minimum, and it will speed up the process as well.
So just if I can make one comment there, where you talked about, the regulation and regulatory aspects. So I just want to draw everybody's attention to, again, one of the articles I came across with. It talked about a very interesting, it was an opinion about how India must harness fintech to overcome COVID disruptions. And what I found very interesting in the article was that, first of all, they must build a system that encourages the development of a robust, secure, low cost, and contactless financial products and services. Okay, given that, obviously because it's of a financial nature, then the regulators come in. So SEBI, which is the Securities and Exchange Board of India, in early this June, in the first week, they released their regulatory sandbox testing framework, which is called SEBI RS Circular. Now, while the ongoing pandemic has disrupted the way we all interact and conduct business, it has also accentuated the role of a financial technology, fintech. These sandboxes can play an important role in promoting fintech innovations to meet new consumer needs. For example, these sandboxes are often viewed as a signal to the market about the regulator's openness to the technological innovation. And this message is very critical to encourage businesses to innovate and to create solutions to fit for the new reality. Whilst these announcements was a very big welcome move, the existing Indian regulatory framework is not well equipped to harness the full potential of regulatory sandboxes. And this created some challenges, in my opinion. Why? Because on the one hand, you have the SEBI, then you have the RBI, which is the Reserve Bank of India. Then you have another body called the Insurance Regulatory and Development Authority of India, IRDAI, and so on and so forth. And each one have their own regulatory sandboxes. So this is where the potential frustration or challenge can arise from. So a lot of new fintech solutions which enable consumers to adapt to a new social order marked by physical distancing because of the social distancing without losing access to the financial systems. So this heightens the need to strike the right balance between the regulatory priorities on the one hand that promote the innovation and efficiency and reduce the economic vulnerabilities while keeping the risks in check. And this is what the sandbox is there for. It's an important tool to achieve this balance. Where were the two challenges in this? One, the present framework there for the fintech sandbox testing is scattered across 4 different financial regulators. So they're all working in silos. So there's no coordination between them. So this is a challenge to the startup, because I've got to go, this guy says one thing, this guy says something else, and so on and so forth. And then what was the second challenge? The second challenge was there was no uniformity in approach adopted by each regulator. For instance, while the RBI and IRDAI permitted non-regulated entities to apply for their own sandbox testing, SEBI allowed participation of those same entities only through partnership with a regulated intermediary. So I wanted to just flag this particular opinion that appeared, because I think it's very important, and especially for, depending on which geographical zone you're in or which regulators need to, I mean, here in Dubai, we have the, FinTech Hive in the DIFC, and the DFSA is the regulator. In Abu Dhabi, we have, a separate ADGM and so on and so forth. And I'm sure in Bahrain, in Saudi, they have their own. But I'm just giving that case of India, but you can draw parallels between different geographies. So it's very important to understand who your regulator is and what his requirements are. And what would be helpful, I think, from a government point of view, and this is also something that I see, the very people who are regulating, with all due respect, some of them are not tech savvy enough to appreciate what is it that the startup is doing. And therein lies the void as well. So it's also a question of not just hand-holding the startup, but hand-holding the regulator as well. It's a knowledge gap that needs to be brought closer. Because on the one hand, you have the guy who's supposedly giving the regulation who may not be well equipped and up to date with the changes that are happening on the technological startup innovation plane. And therein lies the chasm and void. So I think these are some thoughts I just wanted to share with the group.
Thank you very much, Salim. We do have time for a few more questions. Following question from Abhishek. Are we going to see blockchain adoption more in financial sector? An open question for all panelists.
Well, I'll answer this question because it's something I talked about when I was kindly asked by Finovate UK on behalf of the Ministry of Finance of the United Arab Emirates to produce a report about blockchain in this region. The report is probably about 2 years or a bit old. And I made a comment on this particular point back then. And my answer was the following. There's a lot of hype in blockchain. Let's be very, very clear. Yes, while on the one hand, there's a lot of activity in blockchain, and the challenges lie in, again, the knowledge gap. And let me give you an example. If I asked you today to tell me how many Java developers exist in the world today, the answer is 6 million. So if you wanted to hire a Java developer to write some software, help you with your putting the tech together in your project, there are people available. Let's ask the same question. How many blockchain developers are there in the world today? So this data, which is about 2 years old, so the number may have gone up since then, it's not even 1 million. It's not even 500,000. It was 10 to 20,000 or 10 to 15,000 2 years ago. So this is the challenge. This is a bottleneck. The actual people who can go under the hood and do the work and create those blockchains. That's one challenge on the one side. Then let's come to the blockchain architecture. Let's talk about that on the second side. Now, whether it's permissioned or permissionless, it's a separate point. Let's talk about the transaction speeds on the blockchain. There are challenges there. Visa, MasterCard wants to process a lot of data. They need very fast execution. I'm talking within milliseconds, right? On blockchain, it takes time because it's a consensus. It has to go around. 51% have to give the thumbs up. And then, of course, by the time it happens, so whilst there are groups that are actually focusing on this point, and there are lots of different, I don't want to go into too much technical details here, but I know there are companies that are focusing on how to improve the architecture of blockchain to enhance the speed, which will allow you to scale using blockchain. This is important for real blockchain adoption to go worldwide and become on a big scale. This particular second bottleneck has to be addressed. Till then, we can have wonderful ideas, lots of PowerPoints, lots of consultants making lovely, nice, rosy PowerPoints. And then the third point is, maybe you don't need blockchain. Maybe the existing databases, SQLs and stuff can do the job. Maybe I think that the thing about blockchain, which really attracts people and yet could be a double-edged sword, is the immutability of it, which means once it goes there, you cannot tamper with it and everybody can see it, okay? Which is a good thing, okay? The other side is, what if I do something and then I want to change, I made a mistake. What happens then? What do I do? So, I mean, there are many, pluses and minuses of blockchain. And whilst I'm watching that space, I have been watching blockchain since 2014. I was one of the early investors in a blockchain company, which actually also came to the region and was part of the first cohorts at the incubator. I forget the name now. In Emirates Towers, you've got their. They were selected by them as the first cohorts, and they were addressing a very interesting problem using blockchain technology. And as a result, this is how I got exposed to the world of blockchain. But at the same time, I learned a lot about the pain points within blockchain. And whilst more and more people are looking at it, and that number, so I think the more education, the more knowledge is transferred and created, and you expand this community of developers, I think then you'll be in a position to solve that problem on the bottleneck and expand the projects that can go on. But, you know, a lot of people talk about blockchain, and there's been a lot of, you know, bad actors that have come and tried to do all sorts of things in that space, which, you know, did give it a bad name once upon a time. But as an innovation, it is a great technology. And the best thing about blockchain, in my humble opinion, is when you dig down into the mathematics behind it, that is intact, that is solid. So that's going nowhere. It makes sense. It makes a lot of sense. And that's why I believe there's a future of blockchain. And of course, the more time people spend at it and the more minds that are address challenges, I hope within time, hopefully within my lifetime, we will see this, you know, have its time and day in the ecosystem.
Thank you, Mr. Sleem. Mr. Saleh, any input on the last question?
Yes, actually, I know we are running out of the time, but if you allow me to add, I think the question is, do I really, for the time being, based on the given factors, not too many skillful people over there, the ecosystem per se for blockchain, it's not really completed. So the question is, do I need it? If yes, what is the other options I have? So in the end of the day, once you, I mean, based on today, once you compare blockchain to other options, I think we'll go with other options until we see the ecosystem, blockchain ecosystem more developed, and we see more people in that space.
Thank you very much, Mr. Saleh. Thank you, gentlemen, for joining us. It has been a productive webinar. I appreciate both of you taking the time for joining us today. I believe this is the end of the session today. I hope you all stay safe and healthy, and we'll be in touch soon. Thank you, gentlemen.
Thank you very much.
Thank you.
Thank you.
Thank you all. Thank you very much. Thank you, Salim. Thank you.
Thank you, Salah.